Today, we are going to be talking about how real estate is such an investment for business owners and for people who, want to diversify their portfolio, basically. So, Mark, what can you tell us about deciding to do that? What are the pros and cons and that kind of thing?
I think real estate as an investment as a whole is a good thing for a business owner. Oftentimes, you have the opportunity to buy maybe the building that you're using to operate your business. And in doing so, there's a couple different ways you can structure that and set that up that can be tax advantaged. But by just acquiring the property rather than leasing it from somebody, you're building wealth and you're building equity in something that's an asset that you can pass on to your heirs and so on and so forth. So just in general, real estate's a good play. It's tangible, holds value. If you look at the long play on real estate, typically over time, it's a good investment. And from a tax standpoint, as I mentioned, there are some advantages to owning real estate when you have an operating business. And in one of the areas is in what's an area that's called self-rental. And what I mean by self-rental is if you own the real estate, you own a business, you can actually rent that building to yourself and generate some tax savings, and also put in some layers of protection from your operating business and so on and so forth. So there are a lot of good reasons to own real estate when you own a business. Real estate's a good investment when you own a business.
For sure. So, qualifying as a real estate professional, I always find this very interesting because sometimes it's your spouse that can be the real estate professional. Is that right?
Yes, and in fact, oftentimes, because there are certain requirements in order to be deemed as a real estate professional, you have to have so many hours that you work in real estate, and it has to be more than 50% of your time in that activity. So, if I had a job, full-time job, but I dabbled in real estate, but then I had a spouse that didn't have a full-time job, you can designate your spouse as the real estate professional as long as they meet the 50% requirement and the 750-hour requirement. And when you do that, you unlock some really nice potential tax sheltering, if you will, or some ability to offset your other income with some potential losses. Now, just in general, real estate typically on paper generates losses from a tax standpoint just because you get to deduct some things like the purchase price over time or expenses on real estate. So it doesn't always necessarily, for tax purposes, show a profit all the time. And with that, you have the ability to have these losses that you can generate from the real estate and offset some other income and drive your overall tax burden down. But again, there's some qualifications and some things that you have to meet, some requirements that you have to meet in order for that to happen. And so frequently we will see taxpayers bring their spouse in and have them deemed as a real estate professional to allow that, because when you file a joint return, much more becomes in play.